Sell in May and go away. Such a typical saying in the markets, but is it true? Should we be selling up our Bitcoin, crypto, stocks, and heading out the door for a fantastic summer vacation, coming back at the end of the year to buy it all up again at cheaper prices? Let's take a look at this in more detail, as it's a typical saying that gets thrown out around there in the markets, while there really isn't too much data that people reference. As always, before we dive into the video, if you could smash up that like button and subscribe to the channel if you haven't already, bell notification icon, and top of the video description is a link to our TIA Premium. There is a price rise coming, so you can get a discount by signing up to our free newsletter that comes out once every 2 weeks to your inbox, and going through the prompts there to get your discount on TIA Premium. There's also $230 of free USDT with no trading required across Bitget and ByBit, with those links in the video description, limited time exclusive to this channel. All right, guys, let's start with the definition of sell in May, go away. This seems to be a major problem. Doesn't matter what we talk about, whether it's recessions or support and resistance, bear markets, it doesn't matter what it is. It typically comes down to the definitions that people are referring to when we're talking about a specific topic. So in this case, sell in May. There is a few reasons why it works and a few that don't. So the long and the short of it is, sometimes it works, sometimes it doesn't. When does it work is what I want to have a look at in this video, and when doesn't it work as well. So first things first, typically it's referred to as you sell on the 1st of May and buy back on the 31st of October, potentially the 1st of November. Basically, it's looking at the 6 worst months of the year, May through to the end of October, so November, and then the next 6 months are the good months. Other ways that people look at this is sell in May and go away. And then I guess they might think to buy back in June or July or August or some other time. They don't really have a plan to realize when they should buy back. So I just want to sort of set that clear first up in terms of the definition, because it can get confusing if you're just thinking about sell in May, go away. When do you buy back? Well, typically speaking, they say coinciding with Halloween, so at the end of October. And if you want to get a nice round 6 months, the 1st of November is the date there. Let's first take a look at Bitcoin before we get into the S&P and Dow Jones, the US markets, the biggest stock markets of the world, starting with BTC. So we should know by now that 2014, 2018, 2022 are the bear market years for Bitcoin. Then we have the transitional years, 2015, 2019, and probably 2023. I know a lot of people are still thinking that 2023 could be a massive bear year, but it doesn't seem like that at this stage. Then we have the 2 bull market years, 2016, 2017, but 2017 is really where the public comes in. Same thing happened in 2020, 2021. 2020 was also a bull market year, but 2021 is pretty much where the public comes in. And so I expect the similar sort of thing to happen again. You got 2024, 2025. So we've got 2023 as being similar to 2019, where it's that transitional year. And then 2024 would be start of a feeling more like a bull market. And then 2025, basically where the public probably gets in. We'll wait and see. It's still a fair bit of time away. So I've mentioned that because we need to get a reference to what type of market are we in terms of the cycle for BTC. So I'm saying that 2023 is similar to 2019, it's similar to around 2015. Let's have a look at the amount of months that we have in a row of positive months. So in 2015, we had 4 months in a row before we move over to January, and it was a negative month, positive, negative. 2019, we have 1, 2, 3, 4, 5 months before a few negative months in a row. 2023, we've already seen 4 positive months. Yes, February was only barely a positive month. Nonetheless, we've got to use the data that's here. So that's 4 months there as well. So we're kind of coming towards the end of any sort of cycle for the uptrend, for the up months. So it's starting to put the pressure on that May could be a sell in May, go away type scenario. But then that leaves the next 6 months of the year, so all of May through to October, as to whether that is going to be a positive result at the end of that 6 months or a negative result. The other thing we can look at here is the winning streak, or the up month streak. Like we saw in 2020, we had 3 months leading into 2021 another 3 months. So basically 6 months in a row of positive months. But that was in a different stage of the cycle, something that we might experience next year into 2025, so 24 into 2025. We also had 4 months at the beginning of 2013, which ended up being a very, very bullish year. You can see that it finished in November with a huge gain at the end there. And basically from that, there wasn't too much else that was different. So by the time you get to about 4 or 5 months of positive months, you're pretty much running to the end of that streak. So what does that look like on the chart? So I've shown the yellow, these big yellow boxes are those, the bull markets that we talked about here from 2015 into 2017. Then we have the bear market year, and then again, go those few years. Then you've got the bear market year and so on. So that's what we have here on the chart. The pink verticals is May, and the white is October. So we're going to have to look at the end of that, basically the closing price of that month. So we're going to look from pink to white, pink to white, pink to white. And like we can see here from the first cycle, going from pink to white, it was up. Then we had pink to white, also up. Only marginally, but it was still up. You have this, the top of the market here in 2011, a down year. So basically pink to white was negative. So the sell in May, go away, actually worked in that period, but this was a negative year. So basically a bear market. We have another bear market through here in 2014 into January of 2015. So the pink, so there's the May open to the October close, was a negative. So sell in May, go away, worked in the case in the bear market. In the bull market, pink to white, up. Pink to white, up. And again, pink into white, up. So within a bull market, wasn't a great thing to do during the 2015 through to 2017 bull market. I guess you can start to see the pattern here. We have pink into white, negative. That's in the bear market. We have the bear market of basically 2018. Following into the bull market, well, we have a pink into white. Yes, you missed this blow off top here, but it was a positive. So, I mean, you would have stayed in the market, but it just really depends on what your strategy was during this period. Quite a big blow off, and then also a pullback. Pink into white, another up 6 months. We have the close in May, and we might need to get this to make it a little bit clearer. The open in May, I should say, to the close in October was up 6%. So it was still positive. You had a huge pullback in May to June, and then the market rallied into those tops. So, I mean, if you sold in May and went away, who cares about that 6%? You made pretty good gains throughout that entire 2 to 3 years. So it's really shown that every bull market, at least in these sort of 3-ish year periods, you don't want to sell in May and go away in the case of Bitcoin. For the bear markets, right here, and what we're about to look at right here, it has been a reasonable strategy. Actually, have been pretty positive throughout that entire time to sell your crypto, to sell your Bitcoin and go away and come back in that November date. And the same sort of thing again in 2022. Here's May, all the way into the end of October. Very, very big bearish period. And then, of course, November is here, starting potentially the new cycle. So should we be selling in May and going away? Based on the data, probably not, but that doesn't mean that we won't get some sort of peak in May, a pullback for June, July, August, and maybe we start to creep up in September, October, towards the end of October, and put in a higher price compared to where we are now. So there's potentially some big troughs and then another peak to come within that period. And it's shown that time and time again. It might be marginal at the beginning, but it starts to ramp up towards the end of that cycle. And I suspect this cycle is not going to be too different to the previous cycles. So selling in May, going away, I probably wouldn't if I was looking at it strictly based on this definition. And this is pretty much the definition across the board when it comes to finance. Sell on the 1st, buy back on the 31st of October or 1st of November, whatever the first trading day is that you can actually buy back in, of course, referring to the stock market. At least in the case of Bitcoin and crypto, probably not going to work out for you. So what about the stock market? Well, I've got a fantastic chart here that shows where we are at in terms of the market sentiment. Before I get into that, you know what to do. Like and subscribe to the channel. This is your home of macro cycle analysis, telling you the things that no one else is going to tell you on the internet, because unfortunately, the majority of people are still very much stuck in the bearish camp. And we're seeing it quite prevalent now, where a lot of people are believing that we're in this sort of big bearish camp at the top here, waiting for this big crash, because they think that this chart looks exactly the same as this chart, which it kind of does, but that doesn't mean that it has to fall exactly like this chart. These are guides in terms of the market sentiment. They're not guides in terms of fractals, and markets have many different fractals, as we can see through the S&P, like we can see on the Dow Jones for hundreds of years. This is the GFC running into that peak before the collapse. This doesn't look anything like what was going on in the chart right here. So it's just important to understand that these are not fractals, meaning that they're the exact overlay of the price chart, but they are good areas to understand what's going on in the market in terms of market sentiment. And so I've posted this morning from another account here, a really good account, looking at how this is probably, can't confirm 100% yet, but probably what's happening when it comes to the market sentiment. And I've gone through and just had a look at the areas of the blue dot and the green dot, which is mentioned here in the original post. But looking at this, going return to normal. A lot of people think we're in this stage of the market right here before we collapse. We've got a lot of reasons which we've talked about on the channel, which is why I always suggest to subscribe and go and checking out those videos. But essentially a lot of reasons to suggest why this is not about to collapse, especially layering in what we looked at on Saturday, where we had the highest monthly close in 12 to 13 months, highest daily close of the year, highest weekly close of the year as well, breaking past significant 50% levels with a lot of pretty positive signs in some of the major stocks coming through as well. Yes, I still know that there is this looming recession and sticky interest and sticky inflation and all these sorts of narratives, but the price chart is the fact. These are the facts on the chart. We're going up. So looking at this as being a blue dot area, I believe these are the people who are trying to short into the beginnings of a bull market, and they're about to get crushed should the market continue higher over this coming week or month. As for where we currently are, I think we're probably somewhere around here. And as I pointed out, a little bit lower. I would say that maybe you could even argue that we're in the stealth phase right here before this bit of a takeoff. So we're about to head through the next breakout point and then start to head higher, where institutional investors get in before the public gets in closer to the top. So the institutions are probably going to get a little bit more comfortable buying up as we get higher into these price levels here, and then the public will be even more comfortable as we start to break out into new all-time highs. So I would argue that, sure, if you want to say it was takeoff in the stealth phase or potentially here in this green section in the awareness phase, either way, I think we're in this first half of the market sentiment before we see this final stage, this final public stage where it blows off into this top. Then you get that bull trap and the return to normal, and then we get the major collapse. I think those things are definitely coming. So I'm not a macro bear forever, but it definitely looks like for now, we're starting to break out of these stages here, either this one here in takeoff or this one here in bear trap. We'll wait and see how the enthusiasm pursues in the coming months. So how does the sell in May, go away strategy work for the S&P? Well, here's a nice simple way to have a look at the next 6 months in the stock market, going from May to October, basically the beginning of May to the end of October. This typically has been the worst 6 months of returns in the stock market compared to any other 6-month period. And the best 6-month period is actually from November to April, which is the exact opposite to the May-October. So if you wanted to sell in May, go away, you might lose some gains. 1.7%, that's an average here of the 6 months going back to 1950. And just holding for those other 6 months gives you a positive return of 6.9. So as an average, there's never a losing 6 months, which is why the selling May, go away doesn't always work. In the cases that I can see it working is if you have a better timing method. such as a swing chart, such as your Gann analysis, your Gann dates, where you don't actually have to sell on the 1st of May, but you look for a turning point potentially coming up as we have with the Investor Accelerator. So go and check this out here, sign up for the discount before the price increases. These are the sort of things that we look out for when it comes to cycles themselves. I don't like to just look at the first of the month to the end of the month, but this is typically how the data is formed out there in traditional finance. But we like to look at specific turning dates in the month. And what has been working relatively well recently are mid-month dates. It could be a little earlier than that mid-month, it could be a little later, but look at these very significant turns on the 16th of August, the 13th of October. You've got an early date here in December, then you have another mid date right here. The market held up for that. So you got the 13th of December. Doesn't always work 100%. You got the 23rd down here, up here early in February, but the market held out until the 15th of February. So the mid-month dates are something that we're looking at moving into May. Another huge one, the banking crisis low, 13th of March. These mid-cycle mid-month dates seem like they could be continuing to work for now. And nothing has said that they're going to change just yet. Look at what happened in April, around the 18th of April. So if we work out somewhere into the mid area of May, could be another top, could be a bottom for a turning point. We'll wait and see, but the market is currently trending up. So maybe we head up into mid-May before we get that big pullback. The market goes quiet, a bit boring, a bit dead, until the market starts to climb out of this sort of correction into that later half of the year. Now, earlier in the video, I did mention about the 7-year sabbatical cycle, basically the Schmitter, but I'm going to leave that for another video looking at larger cycles again. The main thing here is that you then need to layer which stage of the cycle it is for the SP 500, obviously for the Dow Jones, same sort of thing, and layer that on top of the presidential cycle as well, which I have right here. So I've talked about this in previous videos. Stay tuned to the channel. We'll get into this in more detail in future videos as we lead into the second half of the pre-election presidential year, which we've pointed out is most likely going to have a positive year return. So meaning from the 1st of January to the end of this year, 2023, based on the historic data going through pre-election years as well. So lots of different cycles to layer on top of each other. For now, it seems like we might be heading up into mid-May, and then maybe we can sell and go away. So layering these sort of things across the top of each other. Like and subscribe. Thanks once again, guys, for your turnout, TIA members on the weekend. I've got some photos up on YouTube and Twitter as well of our first members meetup here on the Gold Coast. So thanks once again to you guys for showing up and having good chats. If you want to get involved with that, of course, link is in the top of the video description, TIA Premium. Get involved before the price increases, and there's some free USDT with our channel sponsors here, ByBit and Bitget. I'll leave it there for today, guys. Lots of great stuff coming up. I'll see you at the next video. Until then, peace out.